All right, ladies and gentlemen, welcome to episode 6 of Macro Top Checking with Drae. This is going to be the video I'm most proud of. It's going to be the best video because everything we've been looking at so far is coming into fruition, it's coming into play. And this episode is going to be the most interesting as well. Like, I've spent fucking 2 hours and a half looking at the entire market as a whole, and I'm going to condense it all for you and tell you exactly what I'm seeing. And I'll tell you what, there's a lot of manipulation happening out there right now. A lot of manipulation, and overall what I'm seeing, particularly amongst retail, is actually a lot of confusion. And what I think is happening right now is smart money in whales are actually accumulating right now before the next leg up. And bro, trust me, after being in the market for years, it was only recently, probably since February or March of this year, where I was like, you know what, fuck this. I'm sick of just being a random guy that's just buying random charts and just praying to God that I hope I make a lot of money. No, I was like, fuck that. I'm going to figure out what's the absolute best tangible things I can look at in terms of charts and numerative data, quantitative data, but also qualitative data, like things to do with sentiment and behavior and emotions and human psychology, and really connecting the dots and piecing the things together that way. And so I'm extremely excited because, man, this video is going to blow your mind, or I'm telling you right now. Overall, let me just start off by saying, and I know everyone says this, but I'm going to show to you in this video why, but I do think that the markets are about to send extremely hard. Okay, I do really think so. And as many of you also know already, I think Ethereum is going to lead the way, and only select best altcoins will capture a lot of that liquidity flow. And as I've already told you a lot of times in my Telegram channel and stuff, also in my private group, Ledger and Alia are the ones that I'm heavily betting on. Alia's in gaming, looks extremely bottomed. It's obviously in a bullish market structure now. It's about to break out of this accumulation range. Long term, it's a really big flag. It's gonna absolutely moon, in my opinion, beyond all-time highs. I've been invested in this since February, March. So I've really strong conviction in this. Also, Ledger. As you know, I've been talking about Ledger for a long time, since around this range here. I'm already up a few X's, but man, if you do your research and look at all the videos and stuff that I've said on Ledger over the past few months, you'll see why I'm extremely bullish on this. And the chart speaks for itself. I mean, if you zoom out, it's just completely sideways accumulation. It's gonna explode. But with all that said, let's dive into what I've actually come to see, okay? So what I do is I collect a bunch of data, and then I kind of just give it all to ChatGPT for a summary. So I want to read this brief summary to you real quick, and then I'll go through the things individually. But overall, the summary is that right now we're in late stage optimism. There's no denying that a lot of people are definitely optimistic, especially as we broke out of 4K. But that said, I'm still sensing, and based on all the data and stuff I'm seeing, there's still a lot of confusion and disbelief as well. I do think, as chat says here, we're creeping into disbelief. And I do think as we keep going higher and higher and higher, it's going to be, more so disbelief and then just ultimately entering euphoria, And overall, I mean, when we talk about Google Trends, the worldwide keywords are pretty high. They were 100 last week, but now they're 40, 50, so they've cooled down a bit. But worldwide, and interestingly, these are mainly countries in Africa and emerging nations in general. It's funny, they're actually more smart based on this data I'm seeing than first world nations like the US, UK. They're actually front running the bigger, first world countries. Interestingly, retail in those countries, I'd argue they're smarter. They've been getting in beforehand. But in general, the US, UK, Europe, they're still very quiet. The retail, they still don't really give a fuck. They're still not really invested yet. Meme coins have been heating up a little bit in terms of sentiment, but still nothing crazy. The Coinbase app rankings in the world, it's 291, which is nowhere near what you see in actual cycle peaks. In finance, it's 24, so yeah, still nothing crazy. One of the really interesting things, which we'll talk about after, is the fear and greed index, how there's a big divergence with ETH. Ethereum has been rising while the fear and greed index, sentiment, has been going down. And usually that would be a bearish divergence. But given everything I'm seeing as a whole, that to me actually signals smart money strength, and they're trying to just shake out retail before they blow things up. And then once they do, that's when they're going to get retail to FOMO in. So yeah, we definitely haven't seen euphoria yet. I'm seeing a lot of really interesting stuff, man. But one thing we'll also dive into is that it looks like stagflation is going to come into play extremely soon, over the next few years, and that usually lasts a little while. I'll dive into it later, but there's a lot of really interesting things. For example, US 10-year Treasury yields for the first time in fucking 50 years are finally looking bullish. And if you do your research, and I'll explain in this video, that's actually a really bad sign long term for the American economy. And meanwhile, many other assets such as gold, they're consolidating at all-time highs, look extremely bullish. Meanwhile, the S&P looks like it's actually about to top fairly soonish. These are all things that you need to learn to connect the dots with. And so a lot of the stuff I'm self-taught because I think in university and school, they don't teach you a lot of this shit. You kind of just need to learn it yourself. Because connecting the dots is the most important thing. You need to be able to learn to see all these different data inputs and connect the dots to see what's happening big picture. But yeah, we'll talk about that later. In general, yes, Ethereum is leading in terms of inflows and stuff. Money has been flowing into Ethereum. Not altcoins as much yet, but that's perfectly fine as per liquidity rotations. We'll get into that. There's been a lot of psyops everywhere, and I'll get into that as well. But the fact I can tell you right now as a summary, like they're actually trying to get like retail to exit early. They're actually trying to get retail to exit now. And it's funny when you purely talk about prices, right? So prices of a lot of cryptos are still chilling. They still haven't exploded. And they're telling people to get out. Meanwhile, there's coins like Nvidia. Obviously, this is different. And Nvidia's a stock. But meanwhile, Nvidia is consolidating at all-time highs, and it's been ranging at like $180 for a long time, struggling to break out. And meanwhile, they're telling retail to buy into Nvidia. So this has nothing to do with comparing stocks to crypto. The point is a lot about human psychology and how whales and smart money make their fucking money, dude. It's from retail. This is why the rich get richer, because they have all of control. They have control of the media. They have control of fucking everything. They are the smartest people in the world. They manipulate people, man. You know? And most people don't ever learn this shit. And I swear to God, like, one of the main reasons I've come to learn all this is from this guy called Money Tour. Like, I'm telling you, man, like, let me just shout out him real quick. Like, I've learned a lot from this guy. In fact, I've been dedicating myself to just studying all of his content over the years. And yeah, man, I'm telling you, like, shit really just, once you, like, change your mindset from just operating like a normal retail herd guy to operating as if you're the one in control, that's when just your mind expands and you start seeing so many different things that you hadn't even considered and thought about before. Like, for example, as a retail normie guy, you see some news and you see it very face level, very basic, like, oh yeah, interesting, oh no, bearish, oh bullish. But when you really think from a high level, you're like, oh, wait a second. They're telling people this because they want people to think that. Oh, you know what? Maybe it's reverse psychology because this and that. Oh, wait a second. Let's look at the charts. Oh, shit, they're saying this and the charts are here, that. It's just your mind will get blown once you start seeing everything as a whole. It's fucked. And I'll tell you right now, one thing that I'm seeing is just, unfortunately, there's so much manipulation. And until politicians and people in you know, in these firms, like the firms, and the big players, institutions, they're the ones that win. They win, you know. It's fascinating, but we'll get into it. All right, this video is going to be, I'm trying to tell you, it's going to blow your mind. Yeah, overall as well, with like certain niches like AI and gaming, they're really actually starting to heat up. I mean, Tower is looking very, very strong. That chart looks amazingly bullish. Do I have it up? Let me see. Let me show you Tower real quick. Tower looks really, really nice. That's going to be good for like AI in general. I think this is going to lead the AI wave. So obviously Ethereum's going to break out. Alts haven't had the time to shine. I think Tower is going to be one of the main ones that really shine. This chart to me looks really, really healthy and bullish. And obviously, yeah, Tower mooning will be bullish for Ledger as well. So that's good. Also for gaming's looking really strong as well, and that's going to be good for Alia, right? A few gaming coins looking really strong. Also RWA, that narrative is being led by Ondo and Pendle. They're looking really strong. And again, Ledger actually has to do with RWA as well, so that's good for them as well. But yeah, man, things are really, really interesting, okay? Like the S&P is at all-time highs right now. It looks like soonish it's going to hit a top, and I don't know if it's going to be a local top, a macro top, but it's really interesting because while the S&P looks, for now, strong, but it looks like it's going to top soon, and I'll show you right now. While that's happening, okay, while that's happening, and mind you, just a quick note, and I've talked about this before in previous videos, but this huge dump we had a few months ago, this is going to remind a lot of people about the COVID dump we saw. A huge, rapid, very quick dump, and then recovery, V-shaped recovery. It looks the exact same, but they're not going to make it that easy for everybody. They want everybody to think eventually, and it's interesting too, because with the S&P and equities in general, they haven't really been heavily like publicizing into the media up until around now. You know, it's only really about now they're starting to really put a lot of bullish news out there to try to get people to invest in equities. But my point is, by the time you start seeing a lot of things that remind you of how things were in COVID, for example, they start doing a lot of stimulus, fucking, I they start doing a lot more money printing. All these things are going to remind the average everyday person, oh my god, last time they did this, assets mooned, yada yada yada. But bro, by the time you start seeing these things, and they're going to do it on purpose because they know what the average person's thinking, prices will already be extremely high. That's going to be a top signal. I'm telling you, it's going to be a top signal. And so, as I was saying, it looks interesting because the S&P looks like it's going to top fairly soon. Meanwhile, the American dollar, the DXY, to me, it looks actually very shit. It looks weak. And I'm not surprised, given everything we're seeing. As I said, the US 10-year Treasury yields, I'm going to show you some other currencies in a second. They're looking way stronger compared to the DXY. But, you know, let's just zoom out and show you this, for example. So, here's a DXY since around 2002. Look at this, right? So, look at this chart. Think about how you think, how strong it looks, this and that. Then let me show you the European. Oh, well, this is the Swiss franc. Of course, that's doing well. But let me show you the European dollar. The euro. From the same time period. Look how strong this looks compared to the US dollar, man. Look how strong this looks. So, this is the exact same time period, right? 2002. Look at this. Compared to the euro, bro. The euro dollar, bro. This looks way stronger. Way, way stronger. And given everything we're seeing, and I'll get into it, that's a huge telling signal. And this kind of stuff doesn't happen one day to another, but it helps you position yourself, okay? But yeah, again, right here. So, risk on optics right now are strong because the DXY is going down, S&P's all-time highs. But meanwhile, the US 10-year Treasury yields going up, signal that there might be stagflation coming because precious metals like gold and silver, they're consolidating at all-time highs and near highs, which means hard assets are being bid quietly. And I'll get into it later as well, but guess what? They're telling people that they should not be in gold, they should be in Bitcoin right now. And it's interesting because Bitcoin has already gone up a lot, and given everything we're seeing, it looks like Bitcoin will underperform gold now. Which makes sense because now Ethereum's going to lead the crypto market, not Bitcoin. Bitcoin's not going to lead the crypto market anymore. And so it's funny how they're trying to get people to avoid gold right before it keeps mooning. They're trying to get people into Bitcoin, which is just going to underperform. It's going to go up, but it's going to underperform many other assets. And eventually it's going to mark the actual top. So isn't it just funny how they psyop you into never being able to win? The rich people, the people in power, they don't want the average everyday person to win. I'm telling you, that's one of the key things I've come to realize, and it's fucked. But that's the world we live in. And you got to learn to just play the game and play alongside them so that you can win. You can't save everybody. And as unfortunate as that is, it's like, would you rather win at least, or are you just going to cry and do nothing about it and lose? It's like, you have to pick a side, man. But again, given how everything looks, and with the European dollar, the Swiss franc looking strong, that's foreshadowing USD weakness. Like the fact that these defensive currencies are looking strong, that's foreshadowing USD weakness. And so, yeah. Look at this. Equity melts up disguises underlying stagflation pressures. That's the thing. Hasn't happened yet, but there's pressure. There's underlying pressure that's building up. And so meanwhile, smart money knows this is happening. I can guarantee you right now, they are slowly exiting equities as into all-time highs, as they should, right? You de-risk into strength. And they're getting into other assets which are completely ignored about right now. Nobody gives a fuck about metals right now, or other currencies like the EU are. No one gives a fuck. So overall, and that's just the summary, by the way. Overall, we're in late cycle, pre-bluff, top phase, okay? So we're still late cycle, right? So which means time-wise, we're running out of time. But price-wise, I still think we have a good amount of room left to go, especially with Ethereum. And that's good for us, man. That's good. And it's also exciting because it means all this shit's going to happen very quick. I mean, I remember last time my portfolio 20x, right? Last old season, which was from like here to here, October 23 to March 24. I mean, bro, that was a 6-month uptrend with Ethereum. But interestingly enough, it was only the second half of it from January to March. That's when my portfolio 20x'd. It was slowly grinding up from October to January. But it was only January and March where it fully went crazy. And so that perfectly shows you how money rotations and flows happen, you know? So yeah, where was I? So, yeah, America and UK retail, they're not really in yet. I mean, that's exactly what the elite and smart money want. They don't want them in yet. They want them in when it's the fucking top. They don't want them in now. That's exactly how it works. Isn't that fascinating? It's just fascinating. And yeah, in terms of macroeconomics, how everything's looking in general, yields, oil deficits, I mean, yeah, after all the data I get to ChatGPT and stuff, it's looking like there's going to be a break. Something's going to break and things are going to be fucked for a while. But that doesn't happen out of the blue. First, they need things to absolutely moon first. And we're already kind of seeing that. I mean, it makes sense, right? Crypto is going to be mooning. S&P is going to be topped. The DXY is going to be going down. It's a perfect setup alongside the US 10-year treasury yields going up. It's a perfect setup for stagflation, something we wouldn't see too often, but there you go. So yeah, we're late, but we're not done. ETH's leading. Alts are calling up. They're calling up. It's good. Alts are still looking good, by the way, and I'll get into it. But yeah, you got to be ready to de-risk into strength, okay? De-risk, gradually take profits. Get yourself into hard assets, okay? Get yourself into hard, physical, real-world assets. You're going to be fine. And make sure you diversify. Make sure you're not too over-leveraged so you don't get too much, too many loans and stuff. Make sure you're protected in a sovereign matter as well if you can. Don't be heavily reliant upon just one place or one country. You never fucking know. Typically, when markets in general all go to shit, they typically mask it with wars, with fucking, you know what I mean? Just they what's it called? Sorry, it's barely. It's like midnight here in Bali. They pair it with black swan events, right? So I'm not saying another fucking pandemic is coming, but I'm saying bad shit can go down suddenly, and you want to be prepared for that kind of shit, right? But overall, with all that said, let's get even more into it, alright? I told you, this video is going to be one of the best we've ever done, because as I was making this video, the pieces were connecting to me, and I was thinking, holy fuck, like, this is nuts, alright? But listen, overall, when it comes to Ethereum, PA looks healthy, okay? It looks healthy. We've had up only since April, yes, you know, granted, but we only just recently broke out of the 4K range, and we haven't started seeing euphoria, and that's a good sign. We broke out of a huge level, but no euphoria yet. In fact, as I told you before, sentiment has actually been decreasing while price is just chilling above here. That's exactly what smart money would want. That's what they would want. If they were distributing right now and actually exiting aggressively now, they would want strength on the retail side. But right now, it's the opposite. That's a key sign that they want to push prices up a lot higher. So these shallow pullbacks and consolidation after breaking out of the higher time frame resistance is the exact psyops of disbelief that the smart money and whales and elites would want. My point is, like, the fact that there's shallow pullbacks here and consolidation here, while noise is very quiet and actually bearish from a lot of people, that's a kind of disbelief and confusion that they would want to instill in retail right now, because they don't want retail buying right now. As I said, they want people buying at the fucking top. It's how it always is in markets, unfortunately. But I mean, even look at this. I'm telling you, a lot of influencers, and I don't know if he is paid an influencer from smart money like mainstream media or some shit, or if it's just a fucking idiot. But look at this, for example, today, a day ago, Alex Becker, 300k views in just one day. He's probably one of the biggest crypto influencers. You know what's he saying? He's telling people that he's selling all his crypto. He told people to exit Bitcoin and crypto. He's even telling people that there's going to be a Q4 crash. Meanwhile, everything I'm saying looks great. So who's going to be right? The guy that has a fuck ton of retail following him, and a guy that his incentive is probably to attract as much attention as possible, which in this case is probably actually bearish news, or the opposite. Anyways, short term, we do want to see Ethereum hold up above this orange line here. If we want to hold like the short term bullish market structure, right? Above here, we're having high lows here, we're consolidating. I mean, I've seen similar price action on Bitcoin before over the years where it starts breaking out of important zones. Like, the overall sentiment is still very quiet or just in disbelief, so people aren't really FOMO in yet. And prices keep going up. Let me get water real quick. Oh, fuck. Long day of work. Shout out to Ledger, Alia, all the other projects I'm working with, which you'll find out soon in the Telegram channel as well, for the lower cap ones. Shit, alright. So, now next, let's look at stablecoin dominance charts. These are very important because they basically signal a lot about liquidity flows, right? The higher that stablecoin dominance charts go up means... what's cool? Well, yeah, it means that they're dominating more of the, market share, which means there's more money entering stablecoins. And when it goes down, that's good for risk assets because it means money is actually leaving stablecoins, which either means it's leaving crypto or it's getting into risk assets. And in this case, it's getting into risk assets for now. But now I'm thinking out loud. I mean, yeah, it could get to a point where if it's dropping, it just means money's exiting crypto too. Yeah, makes sense. But anyways, so let me look at my notes here. So I initially had like a flag pattern kind of drawn here, and the 1-to-1 extension aligns perfectly with some macro bottoms I've drawn. But it's kind of actually got invalidated. I mean, there's been a lot of shakeouts. I mean, they had a, there's like a diagonal trend line here. We had a shakeout here. I predicted to people there would be a shakeout. It was. We dumped a lot. But then again, we broke out here, and we broke out of this like sideways one here again. But now we rejected it, and now it's become resistance again. So it's a lot of manipulation. But then you look on the 2-day chart and look at this. This is why it's important to have paid trading view, because you can look at different time frames. But if you look on the 2-day chart, at least when it comes to this sideways, this kind of flag here, it's still, trading within it. And so it's still respecting it. But overall, what I said here in my notes is that, I mean, it's entered back into the bearish range. That's good. That's what we want to see. So hopefully we see consolidation downwards. And I think we will. Overall, as I said here, it's important not to overthink it. Because without any TA or anything, you just look at it. You can just tell that high time frame, it looks bearish. Like, it looks shit, okay? And that's what we want. We want this to go down for the risk assets to go up. So this does look shit indeed. And USDC, which I've talked about before, about mainly being operated by institutions and smart money and whales, right? And because it's not as big as USDT, the flow of money and like the actual price action of the USDC dominance, sorry, it tends to be a lot more smooth and accurate. So for example, the shakeout that it had, right, the deviation it had, was a lot more clean and simple than USDT. It just had one deviation, one simple clean fake out. Look here, right? And boom, straight away, back into the range and rejected, and now confirming our bias that's within it, because it tested the resistance and now going down again. So unless we like keep going up and close above this high, I think, yeah, the top is in for USDC dominance. That's good for us. I think it's topped, as I said here. And again, important not to overcomplicate things, because, yeah, long term it looks very shit as well. Look at that. Look at all that space as the drop, and yeah, it doesn't look good to me. It looks strong. Weak. Sorry. It looks weak. Let me tell you something else that's very, very interesting. This is one of the really cool things that I kind of connected the dots with, all right? So look, between, I think it was the 19th of August and 25th of August, ETH made a higher low, okay? It was up about 7%. Meanwhile, USDT dominance and USDC dominance made higher highs, and they were basically equal highs, okay? They made basically just equal highs. Now, usually, this would be bearish, because, as I said before, stablecoin dominance charts going up means money's actually entering stablecoins, which is bearish, because it means people are selling their assets. But there's more to it. And my gut reaction when I actually saw this was like, yeah, I'm assuming this divergence doesn't mean much. I just had a weird feeling about it. But then I figured out why. So, obviously, other than the actual divergence itself, both the charts did go back into the bearish ranges, as I told you. They went back into the range. They got accepted in them again, which shows that they were just deviations. But there's more to it, because Bitcoin did in fact drop when stablecoin dominance charts went up, which means that's convergence, which means there's no divergence there. It actually followed as it should do. Like, what should happen is when stablecoin dominance charts goes up, risk assets should go down. With Ethereum, it didn't. Ethereum showed strength. It kept going up. But Bitcoin went down. And that's a little hint about what's happening in the market right now. So Bitcoin dropped, but at the same time, Bitcoin dominance also dropped. So what does that mean? If you think about it, what does that mean? This tells me that liquidity flowed from Bitcoin to Ethereum instead of stablecoins. So even though stablecoin dominance went up when Ethereum went up and when Bitcoin went down, what this actually tells me is that because Bitcoin dominance went down, right, the majority of that money of Bitcoin when it went down was actually going into ETH, bro. It was actually going to ETH, not actually stablecoins. And it makes sense because stablecoins, they basically just made equal highs. And so that's a little hint, if you're able to connect the dots, that money's actually starting to go into ETH now. And it makes sense because ETH has been showing strength, right, with the higher low. Meanwhile, Bitcoin has a lower low. And this confirms it. Ethereum and Bitcoin, this chart, were 10% during the period in which Bitcoin went down and Ethereum went up. So this is one of the first clear tail signs that Ethereum is showing real strength against Bitcoin. And yeah, like a lot of people are not seeing this, I can tell you right now. So what else? Now let's talk about Ethereum and others total 3. So others total 3 is a chart that represents others, which is every coin out of the top 10, against total 3, which is all the coins other than the top 3. And so what you'll notice is Ethereum recently made a higher low, while this one made a lower low, right? which means Ether's leading and alt aren't following it. Alt aren't following it. Though on a more high time frame scale from the 1st of August, Ethereum's done a high low, and alts have also done a high low, which means high time frame liquidity flows are still on track. Okay, like high time frame from at least from the start of the month, there's still convergence with the flows. You know, as Ethereum goes up, altcoins go up. That's what you should still be wanting to see. It would be horrible to see the opposite, but no. This foreshadows that the liquidity flows and rotations are still happening, just on a minor scale, and it's only going to be once Ethereum goes up and up and up that will translate into altcoins. You know, and so what do I write here? Yeah, so yeah. Anyways, so in terms of the others total 3 chart, you can see that it's actually holding up pretty nicely. Okay, it's holding up pretty nicely. It's getting closer and closer to the, to the peak of this kind of, you know, range here. And so it could break out at any moment, really. It really could. So pretty interesting to see there. All right, now let's talk about Google Trends. So I've showed you this before, but I actually track all these Google Trends myself. I look at the American Google Trends, I look at the United Kingdom Google Trends, and I look at the worldwide Google Trends. I look at all of the scores, okay, and I actually compare it with the previous weeks, just out of curiosity. Yeah, I have the previous week's data somewhere there. And then I give this data to ChatGPT. All right. I look at it myself, give it to ChatGPT. Based on the data itself, you can see that worldwide FOMO it's there. Okay, worldwide, the retail FOMO is there, and it makes sense because I was saying before, low key, like the emerging markets are fucking smarter than the fucking first world countries, man. I'm telling you, they're smarter. Like they're like, oh shit, like crypto's gonna go up. Meanwhile, the Americans and Europeans, they're waiting for the things to be fucking top to get in. Fucking idiots. But yeah, UK and US still very quiet. They don't give a fuck. They will when it's the top, and they'll lose money. It's kind of funny. You can like see the stupidity in this data, but yeah, in terms of meme coins and Google Trends, there are like they're starting to heat up, but nothing crazy. In terms of psychology, it's still mixed. Some people have disbelief. Some people still think it's early. In general, it's not euphoric there. But yeah, so overall, based on that, as I said before, you know, we're in a late cycle stage, but still not the top. So let me talk about the fear and greed index divergence, which I noticed, which was very interesting. So last week it was at 50. This week it's at 45. It's actually lower. But the reason that's retarded is because Ethereum's higher. Like they're somehow convincing retail and the average guy that crypto is like, it's not looking good when prices are literally higher. It's a clear tail signal at this stage of the market because nothing's gone euphoric yet, right? If things were euphoric, this would be a bearish divergence. But right now, it's good. This is what you want to see. Because right now, they're trying to not get retail in. The sentiment is worse, even the prices are slowly grinding up. That's a perfect setup for just a disbelief rally and then euphoria. Because by then, they're going to be like, oh shit, wait, what? Like, the price is going up, oh shit. Then they're going to get in, then it's the fucking top. It's rinse and repeat, man. It's just everything starts to make sense when you connect the dots and learn this shit. But, yeah, as I said here, like, Ether's up 8%, while the fear and greed index sentiment is down 10%. So it looks like, yeah, like a setup for further continuation, given that we only just broke out of the macro range at 4K. Right now we're at fucking, what are we at now? 4.5 grand on the dot. So yeah, I do think we're going to continue to see a slow grind up and then things are going to go crazy. Okay, that's what I'm seeing. Everything's making sense right now. Bitcoin dominance is also dropping, okay? It's respecting these short-term fib levels really nicely. Respected this one here. Maybe a little short-term reaction here at 56.71. I drew some more macro ones, higher time frame, based on the big pivots we saw. And shout out to Fibonacci levels. If you haven't learned how to draw that, definitely learn that. But I drew from the big pivots. And coincidentally, one of the main levels, so because yeah, I don't think hero here will be hit. I really don't think so. That's too much. But this huge support level around here, if you just look at it here, like, all right, ready, right here, big support level. Coincidentally, this fib level is right around there. And coincidentally too, this is just me being a Chad, a little bit of a smarty. I wrote this like a while ago. I wrote here, anything here or under is euphoria. Heavily exit. And so yeah, in terms of fib levels, I think this line here is a really good level to watch out for. So yeah, I mean, for all of you wondering where Bitcoin dominance could drop and bottom out is 47 to 48%. That's a really good case scenario. Right now it's at 58. And so we've already seen ETH and altcoins do pretty good when Bitcoin dominance is already down 12%. So imagine when Bitcoin dominance drops another potential 17, 18%, right? Just shows you, man, like things could get and will get nuts, but you have to keep in mind, here's one thing I've noticed as well. The elites and smart money, they know that people remember shit. In general, like very often people are stupid and they forget shit, but often they remember things too. With Bitcoin dominance, retailers have been accustomed to think that every time Bitcoin dominance drops a fuck ton, that means altcoins all just go to the absolute moon. Will they make it that easy again? Probably not. Because you have to keep in mind, Bitcoin dominance chart, all this represents is money in Bitcoin relative to everything else. So this going down doesn't necessarily mean money's actually going, for example, into Ethereum, into altcoins. It can also mean money's going into stable coins, ironically, right? And so everyone looking at this thinking, oh my God, the more it crashes, the better it is for altcoins and Ethereum. It's like, the answer's kind of like yes and no. Like you have to take it with more nuance. When you start to see things with more nuance, that's when you really start to play the game of probabilities and understanding markets rather than just having a binary approach of like up or down or bullish or bearish or, you know, like you need to have more understanding of nuance in this game because it's one of the most difficult games in the world, but it's also one of the ways to get the richest you can. And there's a reason that when it comes to control and power, I mean, the markets are one of the most blatant examples of how this world's corrupt, in my opinion. Like, everyone talks about, oh, the world's corrupt, the world's unfair, but after years of being in the markets, seeing things firsthand, especially over the past 6 months and more I've learned, the markets are the easiest example. Once you know where to look, once you start connecting dots, once you start looking at the media, prices, how they do things, you start to really think, oh my God, like, yeah, this world's fucked. And, yeah, so, again, Bitcoin dominance, it's looking good regardless, it's looking good. The others dominance chart is looking very good. So this represents the dominance of like others, right? Which is coins outside of the top 10, which this basically means small caps and mid caps, okay? Small caps and mid caps, they're showing strength, which means it's time for alts to shine very soon, okay? That's good for us. It's time to shine very, very soon. As you can see here, they've been calling up for quite a while. Had a little breakout and fake out here, another fake out here. Now it looks ready for continuation upwards, in my opinion. Same exact thing with the others chart itself. Looks primed. Others BTC looks good, and that's good because it means altcoins are going to start to outperform Bitcoin now. And so again, look at all the strength. Like it's been calling up, breakout, retest, boom, continuation. So that's good. Meanwhile, Ethereum Bitcoin chart has been going up, just mooning basically, parabolic. And I wrote here like, will it continue to go up only and follow the parabolic curve or not? And I wrote that I think so. I think it will, because we're seeing a clear rotation from Ethereum to Bitcoin. We've been seeing very shallow, weak pullbacks, which means that right now it's in a very clear trend. Okay, it's in a clear trend, and when it comes to trends, sometimes you just don't have to overthink it. If you're in a clear uptrend, keep riding the wave until it breaks. If you're in a bear trend, keep riding it until it breaks, and then you have to carefully manage your exits, entries, or But yeah, overall the total 3 chart looks strong. It's been consolidating at resistance for a while. And it looks like, let me clarify here. Resistance looks like it's losing strength, right? Resistance looks like it's losing strength. We're consolidating right below resistance, so that's why I think we're going to blow straight through it, unexpectedly for most, right? As I said, retail is not really in altcoins right now. Same thing for others, right? Which represents everything other than top 10. But interestingly, you can see that while total 3 is really close to all-time highs, really, really close, others is still pretty far. And so as I wrote here, it's much further from all-time highs than total 3. So it either lacks strength this alt season in general, or for now it's just lagging and it's going to blow much harder very quickly towards the end. What I wrote here is that currently the strong lag, and given how far others is from all-time high compared to total 3, unfortunately makes me think that it will underperform. This makes me think that small caps and mid caps relative to the major top 10, they're gonna underperform. And it makes sense because in previous cycles, retail have been accustomed to think that any fucking altcoin, any random crypto coin is gonna make them rich. Because that's what happened in previous cycles. It's true. Like 2021, those previous cycles, all altcoins, because it was way less, they would all go up and do 10, 20, 30 X's like it's nothing. It's crazy. People have become accustomed to think that still. People still are fucking trapped in that. But no, what's gonna happen is that only the best coins are gonna receive the most inflows. Which means Now more than ever, man, you need to be the most selective you possibly can to, ensure you have good odds, okay? And as I've told you before, I'm betting a lot on fucking Ledger and Ali, baby. I'm telling you, these two are going to do very, 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 very well. I've been in the space, I'll tell you right now, I've been in the space of small caps and stuff for like 3 years now. 3 years, 24/7, living and breathing this shit. I'm telling you right now, Ledger is probably one of the best coins I've ever come across in terms of just risk to reward, in terms of like the potential, in terms of the team, in terms of everything as a whole, okay? I'm telling you, as a whole, like everything I'm seeing, you don't see this type of stuff very often at all. You don't. I'm telling you, I promise you. That's why I've been, talking about it very, very heavily since I found it at like 3 million market cap or something, FTV. 3 million FTV. So it's already up like 5x now. But if you just take some time to research everything, all the videos I've spoken about, all the tweets, all the written information, everything, if you study the white paper, the team, what they're up to, you're going to be able to see. And if you learn about AI and decentralized tech and where the future's heading, you're going to be like, oh shit, like it's huge. And so I'm telling you, this isn't some kind of coin you just catch a few X's on. No, this is the type of shit that goes to hundreds of millions, very, very, very potentially high hundreds of millions, even a couple billion. Or fucking more, I don't know. I mean, the fucking founder sold his previous company for $300 million for crying out loud. Okay? He pioneered the crypto landscape. Like, do some research on this team, man. It's a joke. 14 million FTV. I'm telling you, man. I'm telling you. I've been talking about this all the time for months. Like, oh my goodness. Yeah, fucking rich, man. Fuck. Anyways. So what else? Yeah, Coinbase. It looks bottomed right now. Looks bottomed. Monitoring. MSTR and Robinhood look kind of shit to me short to midterm. They look kind of shit. They lost key supports. I mean, lost that support. Hood has been consolidating at really strong supply levels for a while. So I'm thinking it might drop to 82, then continue going up. We'll see. I need to turn on the aircon again. It's a bit loud though. Is this going to turn on or? Fucking. Alright. So S&P, unsurprisingly, has been making new highs. But what has been interesting is that it's been quiet. It's been actually kind of quiet. Like mainstream media, retail, they don't really seem to be all over it. So when it starts approaching into this box that I find of really high interest, with a lot of confluence with TA and stuff, I'm going to start to see if there's start to be a lot of crazy news about equities, about the S&P, the index funds, all this bullshit. If they start to gaslight people and saying, yes, buy when it's a fucking top, all this stuff. As I said before, if they start pushing a lot of the COVID-19 narratives about all the bullish things they did back then, if they start cutting rates aggressively, all of this kind of stuff, that's when could be the top. The VIX, it broke down from here, so So the VIX broke down from the support. That's good for us. The VIX, the volatility index. The lower this goes and lower it stays for, that's good for risk on assets. That's favorable conditions. So we want this to keep dropping, and when it's around here to just stay around here and stuff. That's good. As I said, the DXY to me looks kind of shit. In order for it to remain bullish, we need it to hold this, diagonal trend. To me, it just looks very shit, man. I mean, they had this parabolic movement, then it had this sideways distribution. It broke down, retested the previous horizontal support. Now it's just chilling here. I think it's going to keep dropping. So yeah, I mean, if the S&P does end up topping, as I think it will, by the time crypto's also topped and stuff, money has to flow somewhere. That's the thing. Money always flows from one place to another. People get fucked because they just hold on to their things fucking forever. But you're going to get fucked. Why? Because you lose purchasing power. Everything comes down to purchasing power. People get trapped into seeing a chart going up. They think, oh my God, I'm getting rich. But no, you need to learn to compare charts against different denominations. Okay? And so I think what's going to happen now, I gave all this data to ChatGPT, mind you, everything. The actual data. Not what I think, but fucking data. Right? Charts and stuff. News, this and that. When it comes to anti-dollar hedges, you need commodities, right? Gold, oil, energy, right? Also defensive currencies other than the fucking USD, right? As I said before, the Swiss, fucking what else were we looking at before? The European dollar, right? Bonds. So yeah, let's get into this now. So I mean, last time we saw something very, very similar. It was actually in the 1970s. when there was an energy shock, when US equities were struggling during stagflation, and gold and commodities were just outperforming. So, yeah, the US 10-year Treasury yields, let me show you that. First time in 50 years. This kind of stuff, this is just this kind of stuff most people don't ever learn about or know about. And it's crazy, it's fascinating, because these kind of events, they happen rarely. I mean, for crying out loud, I'm looking at the charts into fucking 80s, and this is a trend change that's happening for the first time in 50 years. And most people will never notice until too late. Now I'm showing you right now. So, again, I gave all this started to ChatGPT. Here's what to explain, because they'll explain it better than me. If the US 10-year Treasury yields enters a secular uptrend, which is yields rising, that signals inflationary or stagflationary pressure, okay? In the 1970s, again, as I said, yields were going up, inflation was going up, and that's what led to gold and commodities like oils, metals, and agricultural assets and stuff soaring. In that time, bonds were losing value because yields were going up. Equities were going down. Hard assets with a hedge. You need a hedge. Okay, you need a hedge. So yeah, if and when the DXY is losing strength, money's going to flow to stronger currencies. There's defensive currencies like the euro, the Swiss franc. They included the Japanese yen, but I looked at the Japanese yen. I'm pretty sure it looked shit. Yeah, I can't be bothered looking it up, but I'm pretty sure it looked weak to me. But yeah, when the dollar's bleeding, people chase real yield. They chase commodities. They chase real shit. Yeah. Usually, let me explain. Usually when risk off hits, right, when equities start going down, the S&P starts going down, whatever, treasuries start going up, which means yields down. But because for the first time in 50 years we're entering a secular yield uptrend, bonds are going to lose their safe haven status, which means treasuries are going to stop being the default hedge. If treasuries stop being the default hedge, people are going to go to short-term bonds, right, rather than the 10-year, 30-year. So yeah, growth and tech. Soon enough, bye-bye. It's going to go into energy, resources, hard asset equities. So, as a summary here, I mean, yeah, first time since the 1970s, isn't that just nuts? Yeah. 50 years, yeah, fuck. That's... I mean, it's confirmed change in market structure. I mean, we broke above, like, say here. Bro, that's confirmed trend change, yeah. Confirmed. I mean, let's draw some, like, short-term, let's draw some short-term... Let's see, I can do from here. Oops. I reckon what I'll do is I'll draw from... That's the thing, you gotta learn where to draw fibs from. I've been doing this for years, so I have a decent idea. Yeah, I could do that, or... How about... That one looks way more legit, but I'll keep both. That's what I do when I draw fibs. I sometimes keep different options, just have an understanding. But this one looks kind of legit because it's a macro top here, so we could have a reaction. But at the same time, it's only the second one here, so we could have like a. I mean, this is if things go absolutely fucking fucked, right? So, yeah. Anyways, again, first change in 50 years. This isn't stuff to take lightly, man. Fuck, 50 years. My goodness. So what will happen if this goes up and when it goes up? Because it looks like it's changed in structure and trend. The cost of money is going to go up, okay? Borrowing costs for houses, businesses, governments is going to rise. That means credit is tightening, okay? Valuations, it's going to be compressing on stocks. Debt servicing stress is going to build, okay? So essentially, what this means is people don't trust the Fed in America. They don't trust it. They don't trust it. And it makes perfect sense that while this is signaling strength, it's going to go up. Meanwhile, they're acting as if everything's okay and the S&P's at fucking all-time highs. I can guarantee you it's a wealth rotation event happening. They're pushing equities higher when they know it's overvalued and it shouldn't be, right? The Mag 7, right? Top 7. They're the highest it's been in fucking ever, I think. I need to look into that. But they fucking not overvalued. I mean, Nvidia, one of the biggest assets in S&P, it's overvalued, man. They're telling people to buy the fucking top. And so it makes you really think about connecting the dots. Like, fuck. They know what's coming. To me, it looks like smart money elites. They know what's coming. So, yeah, fuck. So what's happening in America during the rise in the US 10-year Treasury yields? Government debt stress, because higher refinancing costs means fiscal squeeze. If yields rise despite the Fed cuts a neutral stance, right? That's the thing. The Fed is having this narrative of, oh yeah, everything's fine. We're going to cut rates. We have a neutral stance. Meanwhile, yields are going up. That means the market's like, you know what? We don't fucking believe you. Fuck that. Nah, there's an inflation risk, all right? You think things are fine, but no, I see an inflation risk. That's what's happening. That's what's going on. That could lead to stagflation, because if growth is slowing while inflation is around, yields will climb while equities are going to go down, where usually the assets should be going up. They're going to be going down. And that's going to have big effects on consumer credit and all of this shit. So in general terms, for the summary from ChatGPT, my friend, when the US 10-year Treasury is going up, it means investors believe inflation is sticky or US credit risk is rising. To me, it seems like both, or at least US credit risk tightening for sure. Well, rising, tightening, yeah, same shit, right? So basically, the belief in the Fed's control of the system has been questioned. Like, I don't really trust you now. I don't feel that safe. So, I mean, it really makes you think, what's going to cause the breakout of this trend? If you look at this chart, it looks like it's begging for a breakout eventually, right? What's going to cause it? Is it going to be once the S&P fucking crashes? Is that what it's going to be? Deep it. Deep it, my friend. Deep it. So, yeah. You won't be able to hold cash either. You're going to get fucked if you hold cash too, because that's going to lose purchasing power. And as I said, you need to learn to compare things in real terms. Not nominal terms, but real terms. What's going to happen is, they're probably eventually, after the crash of the S&P, they're going to get the S&P to go up, right? Oh, wow, the S&P is going up. We're getting rich. On paper, getting rich. But relative to a bunch of other currencies, like as we've seen here, gold, commodities, metals, right? Tired here, fucking getting tired. Those are going to be outperforming the fuck out of equities. And so, yeah. That's how people lose. They think they're getting richer on paper. Oh, look at me, richer. Inflation eats them up. Their assets are doing shit compared to other assets. So, yeah. If stagflation comes, the economy is going to go down. Jobs and production is going to weaken, right? And even that fucking makes sense. Why? Because of AI. If AI is taking over a bunch of fucking jobs, then what? What's going to happen to a bunch of... It's just connect the dots. Connect the dots, my guy. Connect the dots. But yeah, stagflation not happening since the 70s is a big deal, because apparently it's one of the most combinations. When the economy is weak and when prices are still going up because of the inflation. That's just sticky. That sticks around. So, fuck me. This is fascinating, isn't it? Yeah. You basically are going to need to be in hedges. And look at this. One little reminder. The fact that gold has been mooning for the past few years, you know, ever since kind of the US 10-year Treasury yields have been going up as well. That foreshadows what smart money whales think is going to happen. That foreshadows. It's been going up out of the blue. I can guarantee you retail wasn't buying into that shit. Meanwhile, they were fucking shilling a bunch of other assets like Bitcoin and shit. Right now, while gold's looking very, very, very strong, consolidating at the highs like this, right? Because you need to see structure while consolidating. It matters how price looks when it's at important areas. But right now, combined with the confluence we have, right? With them telling to not be in gold, be in Bitcoin and shit like this. You can see here. Sure. My fucking internet, great. Come on, don't fail me now, internet. Come on. Don't stop me now. Okay, anyways. Well, I was going to show it's consolidating with a lot of strength. Meanwhile, Bitcoin is starting to show signs of distribution and weakness, right? But this is foreshadowing. This gold mooning before things have gone to shit. Think about it. Why is gold mooning before things have gone to shit? Oh, wait a second. Maybe insiders and smart money know something most don't. Think about it. Fucking think about it. Oh, bro, where's my internet? Anyway. So, yeah. Same with silver. Silver's starting to approach a resistance area, so that will probably have a reaction there. But once it flips that, it's going to be all-time highs. It's going to be price discovery. And so, that could be exciting as well. Could be doing a few X's there as well, while everything's doing very mediocre. But yeah, as I said, the European dollar looks very strong relative to the US. It even has this kind of fucking trend line that's broke for the first time in fucking ages. So that's really interesting as well. I mean, interesting. The European dollar has been going down ever since the 2008 financial crisis. So let's look at the DXY since 2008. I'm curious the discrepancy in how the DXY has been doing. So look at that. Since 2008, right? The US dollar has been doing amazing. Whereas since that 2008 recession, European dollar's doing really shit. Now the times are reversing. Times are flipping. Isn't that fucking interesting, huh? Meanwhile, the Swiss, gotta fucking love the Swiss franc. That's been doing very, very, very strong. Is that foreshadowing something? Is that foreshadowing what's happening with capital rotations? Holding up so strongly. And slowly and grinding upwards. Yeah. Anyways, moving on. As I said, Tara looks good. That's good for Ledger. This is another AI coin that randomly pumped a lot because apparently JP Morgan is going to like commit some money to them. So that's cool. Gaming looks like it's going to catch a lot of traction soon. That's going to be good for Alia. AXS, Axie Infinity Gaming, whatever the fuck. That's looking really good. Alia is built on Immutable, that platform. Immutable is looking very, very bottom, looking very, very bullish. At least we can see $1.10. If it breaks out of here, it could go up pretty strongly. Catch people by surprise, honestly. So yeah, game is looking good. RWA is looking good. What else here? Yeah, overall, is that it? Is that it? Anything else? Yeah, we already talked about this stuff. Yeah, I do want to look at a couple more things, actually. So, this one I found extremely interesting. You will too. Look at this. This tweet from a very, very mainstream news media source from just 2 hours ago has to do with Ethereum Bitcoin. Okay? Ethereum Bitcoin chart, right? Look at this. Ethereum has sharply outperformed Bitcoin since July, with the Ethereum Bitcoin ratio up 130% from April lows. Seven's report, which I think is some firm or some bullshit, says this move carries implications beyond crypto. Alright, okay, let's hear them out. Historically, these rallies have preceded equity surges, followed by sharp market pullbacks, including before the 2018 sell-off, 2020 crash, Today's rally coincides with a tech-led start rebound. Unlike 2023-2024, it lagged. Sevens warns that once momentum fades, equity investors should be cautious. So I saw that, and my gut feeling and reaction to this was like, are they trying to shake people out? The fuck? What do you mean should be cautious? For now, things look fucking great. What this is social conditioning. They're trying to plant ideas in your head, and this is all for a reason, okay? This is not by coincidence, not by random. Let me show you this. And I had a feeling, so I gave it to ChatGPT and I was like, look, if they're trying to do some sort of psyop here and trying to fuck people up, how would they be doing that? And this is what it said. They're trying to get people to de-risk. And this aligns with everything else we've seen in this video. They're trying to get people to exit early. They're trying to get people to consider selling right now. To basically start panicking soon. Right? And based on everything we've seen, which is that the top is not actually really nowhere near yet in terms of prices. That means they're trying to get people to exit now. And so, like, here's the thing. If institutions, smart money, they want prices to go much higher and higher for distribution, they need retail to sell now so that smart money can buy when it's cheap. And then when it's the top, then they'll bring retail over. Which is why they're telling people to sell now. Okay? They're going to push prices up further. Retail's going to be like, oh fuck, I should firm it back in. Then it's the top. Fucking lights work. Okay? So, yeah. They're trying to get people to exit now, basically. Yeah. It's not even rocket science. It's just pretty fucked up. It's pretty interesting, honestly. Because Ethereum looks very, very strong right now. That's the thing. Yeah. Gotta love it, man. Gotta fucking love it. So yeah, at first glance, this tweet just feels like a public service announcement. Oh yeah, la da 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 da. Be careful, la da da. But there's a cautious undertone to it. History says this is when you should be scared. That's what the message with Twitter is. Right now, you should be scared. But everything we're seeing right now says that says that things look bullish right now. So which is it? Are they trying to get people to exit when things look great, or they're actually trying to help people out? Based on everything we're fucking seeing, they don't want to help the average guy out. They don't want to. I promise you. So yeah, they're trying to shake people out right now by planting fear in their heads. They're gonna move prices up, and then boom. So yeah, if you don't understand yet, let's go deeper. They need someone to sell to in terms of whales institutions. If they want to sell the top, they can't just sell to fucking thin air. They need to sell to somebody. They're selling to retail. Okay. The problem is retail isn't really buying right now. They're not really buying euphoric tops. The only way to create exit liquidity right now is to confuse retail. How do you confuse them? By telling them right now it's shit, but then it's gonna do great, and they're like, oh wait a second, it's going great. I'm gonna get in. Then it's the top. I'm repeating myself, but I need to drill it in your head. Like it's what's gonna happen. So right now, while Ethereum looks great, people are hesitating. As I said before, disbelief, confusion. They're like, oh, like what the fuck? They're gonna exit, and then boom. Yeah, it's fucking 12:30 a.m. here. I'm getting tired. I'm starting to waffle now, aren't I? Yeah. So look how crazy this is. In past cycles, Ethereum and Bitcoin rising, like ETH BTC rising, was bullish for altcoins, right? But now they're actually trying to tell people that it's actually bearish. They're trying to tell people, oh, yo, if Ethereum Bitcoin's going up, that's actually like bearish for altcoins. Be careful. What the fuck? Because retail understand that Ethereum BTC up means alt season, insiders are trying to confuse them by telling them a lie, which is like, nah, like be careful. Like there actually is going to be a crash soon, low key, like da. So now that's going to prevent retail from actually rotating, from not getting to altcoins, from not getting to Ethereum. They're going to miss the wave, and they're going to buy the top. Don't you just fucking love this game? How fucking rigged and bullshit it is. It's crazy. It's crazy. But yeah, this is how smart money does it. They, oh, bro. Just read this. Just read this. Yeah, it's as I said, late retail's finally going to FOMO in. They're eventually going to FOMO in, and that's when they're going to sell on them. Yep. So, yeah. Let me drop a few tweets that you can look at. As I said here, JP Morgan says Bitcoin is undervalued compared to gold. Gold, fuck off. Let me write this. It's funny because gold is likely going to outperform Bitcoin now. Bitcoin might do a bit, but gold's going to send hard, it seems. It means to try not to have retail buy gold right now, will accumulate before sending it higher. What else do I have in here? They're trying to psy up retail to think crypto's going to go down short term. No, I think retail. I think crypto short term is going to go up. I think crypto's going to go up. Meanwhile, mainstream media is telling them no, it's going to go down. They're trying to, again, kind of have this illusion that the American economy is going great, right? Best quarter since Q3 2023. Oh, everything's going great. Meanwhile, the S&P's at all-time highs. So connect the dots, my friend. Connect the dots. Meanwhile, they're actually announcing that in September, there's going to be very, very, very bullish news. Well, not news. It's going to be something actually happening. So September is a period of time to watch for a top. Meanwhile, in Asia, they're starting to onboard retail. They're putting up fucking Bitcoin like logos in the sky, like it's fucking Batman or some shit. Meanwhile, they're trying to get retail to think that crypto's only going to start going up in October, making them miss out on the entire September move, which I think is coming. I think things are going to start moving very, very, very fucking soon. So they're trying to get people to wait until October. Nope. No, sir. They're all paid. All these, like, those guys, fucking Rob. Who the fuck is Rob? They're all paid. They're paid influencers for sure. All they're fucking idiots, but I'm telling you. Alright, let's see what's next. I already commented on this one, didn't I? Yeah. So, as I said with the video before, they're all raising the targets. So, NVIDIA's already at very premium high levels and targets. It's struggling to break past. It looks topped. Meanwhile, look at all these firms, all this news from a few hours ago. Oh yeah, now we're gonna raise our target. We think it can go here, 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 here now. Meanwhile, can't even fucking break past 180. Look at the chart here. So that's how they get people as extra liquidity. They told them, look, price is gonna go up higher. Buy now. You know, I've seen like 5 different news articles today about Nvidia telling them to buy now. Meanwhile, they're selling on them. I guarantee you. Oh, this game is fucking retarded. Scott Melker, what's he saying here? Oh, he's saying that Solana is going to outperform Bitcoin. Sorry, Solana's going to outperform Ethereum. My friend, no, it's not. I said here. They're trying to get people to rotate into Solana, even though Ethereum's going to outperform. Listen, if you look at this chart, which compares Solana to Ethereum, Solana is topped compared to Ethereum. Okay? So Ethereum's going to make people more money than Solana now. Meanwhile, they're trying to teach people what's bullish. They're trying to get people to wait for rate cuts. They're trying to get people to wait for like some people in the Fed to get fired before they get into crypto. Typical. They're like, oh, if this happens and this happens, that's when crypto's going to send. But by the time that happens, the price is already going to be way higher. So let me comment this. Social conditioning, they're trying to get people to wait for that when they should just buy now. NFA. Meanwhile, Alex Becker, as I said before, he's telling people to fucking sell his crypto when it looks actually very, very, very primed. 300,000 retail average fucking normies would have seen this shit a day ago, sold all the crypto. Isn't that fucking hilarious? It's fucking retarded, man. So yeah, in general, if I was thinking as well, what I would be doing is getting ready to sell on their asses. Not yet, right? We're going to move prices up. But I would be getting ready. I'd be preparing my de-risking plan, where I'm going to sell at. Meanwhile, right now, where prices are low and I'm still accumulating, I'd be keeping them confused and sidelines. Why? Because you don't want retail buying while it's cheap. Of course not. You want to keep all that for yourself. You don't want them to push prices up. You want to accumulate while it's quiet and shit. And so, there we are. There we are. We went through everything, boys and girls. We went through fucking everything. How does it feel, huh? How does it feel to go through hours and hours of, of market analysis? Yeah. So, that's everything I'm seeing. I do think that we're about to melt up, boys. I think Ethereum's about to send. And so, yeah, I mean, this was a very long video, and I hope you enjoyed it because it took me a lot of time and effort to connect all the dots, to do all this research, and explain it to you with concise notes. But yeah, simply put, we're about to get rich. So, yeah. I hope you enjoyed Macro Top Checking with Drae, episode 6, and we're not near the top yet. We're going to get rich first. Let's fucking do it. Thank you for watching. Don't fade Drae.